Gold, a symbol of wealth and power. And from an investment point of view, it's up 45% so far in 2025. Look how well it performed in the 1970s too. But here's the question, should you invest in gold? Is it a good investment or have you missed the boat? And how much of your portfolio should it be? I mean, are the returns even any good? There's a lot of questions. So in this video, we're gonna answer all of those questions. So you'll know everything about gold by the time you make it to the end. Why do people buy gold? As Damien went through in his video, gold, funnily enough, fits into all of these categories on screen, depending on who you ask. Interestingly, when bankers or those who work on Wall Street use Bloomberg terminals, they press currency to get information about gold. Gold is ultimately a bit of a status symbol. Rich people collect it to show their wealth. Countries collect it to show their power. There are many ways we can invest into gold. I'll put them on the screen and I'll be covering these in a future video, so subscribe so you don't miss it. From a financial or investment point of view, which is more applicable to us, there are a few common use cases of gold. Hedge against market uncertainty, hedge against inflation, diversification. Some of these, unfortunately, are myths as we're going to go through. But these common use cases can all be tied into the returns of gold. I mean, ultimately, if we want to invest into gold and put it into our portfolios, we care about the returns. Quick 10-second tangent. Congratulations to Dean, the winner of last video's giveaway. Dean, let me know your details and I'll send you a copy of Stop Waiting, Start Investing. Cheers. Back to the video. This is the recent performance of gold. It's up nearly 50% so far this year. If you were investing into a gold ETF, SGLN ticker being the largest one, you'd be up 46% so far this year. Interestingly, returns do differ depending on what currency you're buying in. In dollar terms here, the returns are slightly better, whereas in euro terms, they're actually quite a bit worse. But regardless, gold is clearly smashing it this year. But now let's look at more historical returns, and this may shock you. There's a few sources coming up, but this first one is from a Wealth of Common Sense Investing, and this shows in USD terms how gold has performed against the S&P 500. In the 1970s, gold had an amazing decade, as the US ended the gold standard that pegged gold against the dollar. Interestingly, Britain came off the gold standard in 1931. As shown in this article, if you jumped into gold at the start of the 70s, you'd be laughing and much richer. But this then reversed in the 1980s, as you can see here, and that then continued into the 1990s, this underperformance of gold versus the S&P 500. Gold had a max drawdown of 70% and had a negative return for 20 years, which, I mean, as investors is quite hard to stomach. You talk about a lost decade, what about a lost double decade? But in the noughties, it came back again and smashed the S&P 500, mainly due to the dot-com crash and then the 08 financial crisis. To then complete this story, gold underperformed yet again in the 2010s, but is performing better again in the 2020s. This chart from Banker on Wheels shows that gold took 3 decades to recover from its early 1980s peak, although of course it would have been a much different story if you were pound cost averaging each month. Comparing gold now to the global stock market and global equities, from 1971 to 2025, gold has produced an annualized return of 6 to 7%. However, that's the nominal return. After inflation, the real return, what actually matters, is 1 to 3%. This is compared to global equities where the real return is around 5%. These yearly small percentage differences add up to a massive amount when compounded over 50 years. This is also shown in Damo's video. As you can see, global equities as well as US equities have outperformed gold over the super long term. All of this longer term evidence over decades and decades paints a different picture of gold, so maybe it's not such a good investment. I will be honest, when researching this video, the returns quoted can vary wildly, depending on the period, the source, which currency you're looking at, what specific index you're comparing it to from a stock point of view. Yeah, it's just a bit messy. But the one thing is for sure, US global equities have outperformed gold in both nominal and real terms over the long term. But, and this is interesting, shorter time periods do paint a different picture. As we've gone through, gold is having a great year so far in 2025. But even over the last 5 years, as you can see, gold has beaten the global stock market and is very close to the S&P 500. If we go back a little bit of extra time to 2019, you can see it's actually beating US and global equities. So does gold give a good return? How are we going to conclude? There have been many lost decades, including 3 of the last 5. But there's been some amazing returns, especially in the 70s, the noughties, and so far in the 2020s. It seems to be a good hedge against inflation and uncertainty, 2 of the 3 main use cases for it, over shorter time periods. But over long time periods, it clearly underperforms compared to US and global stocks. Clearly, and perhaps unfortunately, market timing is a massive issue with gold. The returns you get really depend when you started investing into it. If you started in the 70s or in the early 2020s, you'd be laughing. If you started in the 80s, 90s, 2010s, you might not be laughing. Your returns really depend on when you started investing it and the time period you're looking at. Before we go through how much you should actually allocate to gold in your portfolio, let's quickly run through some of the risks. Number one is volatility, and I didn't realize this at all before researching it, but gold is mentally volatile. You think it's a safe haven, but it's actually more volatile than stocks. Number two, gold worldwide is usually priced in USD, US dollars. So our returns in GBP, in pounds, really depends on the USD to pound exchange rate. And as we already showed, even in just 1 year, 2025, the returns can vary. And of course, like any investment, past performance is not a guarantee of any future results. And to be honest with you, because gold has had such a big run up in 2025 and the last few years, I question myself whether this can even continue. Normally when any asset has such a big run up, it's almost doomed to fail in the short term going forward. I'm not predicting anything. You can't time the market. I'm not a financial advisor, but it's just an observation looking at what's happened in recent years. How much should you actually allocate then? What action should you take in your investment portfolio? Most financial planners or advisors suggest a small allocation of 5 to 15% of your total investment portfolio. In my opinion, this does seem sensible, particularly as gold does seem to be uncorrelated with stocks when there are market crashes, and if you want to build a well-diversified portfolio made up of multiple asset classes. You could hold it physically through coins and bars, you could hold it through ETFs and ETCs in your ISAs and SIPs. And I'm going to go through exactly how to do that in my next video on gold. But there are multiple options to get allocation in your portfolio to gold. Ray Dalio, the founder of the world's largest hedge fund, in a recent article said that gold acts as an insurance policy within a diversified portfolio. He goes on to say that gold should have a strategic allocation in an investor's portfolio. And that is mainly due to its negative correlation, as we just mentioned, with other asset classes. He said though, similarly, at most you should have is 15% of your portfolio in gold. And ultimately, I imagine it's because gold's returns are simply lower than stocks, particularly over the very long term, as we saw with the data. So if you add more gold, 30%, 50%, you're going to miss out on gains from the stock market. Okay, let's summarize. Should you invest in gold? Well, firstly, it doesn't generate any income. Also, the long-term returns are worse than long-term equity returns from the stock market. So going back to those use cases we ran through at the start, is it really a safe haven or a hedge against uncertainty or inflation? Perhaps not, particularly when the real return of gold over the long term is only slightly above inflation, which technically I guess it means a hedge, but of course not as much as a hedge as stocks, which have a much higher return, real return compared to gold. But interestingly, in shorter time periods, it can act as both a safe haven and a hedge against uncertainty and inflation. It is also uncorrelated with other asset classes, particularly during periods where there's market crashes or dips. So overall, although gold is actually very volatile, it does have a place in a well-diversified portfolio. And I guess more anecdotally, if it was cool to hold gold, imagine you had like a gold bar you could just use as a doorstop or just show off to some mates. Maybe not the best idea. It might get stolen, you might get robbed, but it might be pretty cool to actually have some physical gold on you. For full transparency, I don't personally invest into gold. I see gold as more of a wealth preservation investment, and I'm still in the wealth accumulation phase, which is why I've really tried to funnel as much into the stock market as I can. I do have some Bitcoin and some crypto that I invest into each month, but most of my investments still go to global index funds and ETFs. Do you invest in gold? And how much of your portfolio is it? Let me know in the comments down below. I've also got another video coming soon on exactly the different types of gold investments you can make and how to actually invest into gold. So subscribe so you don't miss that one. Thanks for watching.